Hi, today we're going to cover the 8 most important things before you decide to buy any ETFs. Number 1, the company that runs the ETFs behind the scene. Now, you have seen thousands of ETFs out there, but the most important element of picking an ETF to invest in is actually to look at the company that issues the ETF, manages the ETF, and also does all sorts of asset management aspects of this ETF. So the popular asset managers out there include the likes of BlackRock, Vanguard, and Fidelity. So these are some of the largest ETF issuers in the world. So when you see their names, such as iShares for BlackRock, State Street, whose brand name is SPDR, and also Vanguard, which is a very popular and very long-standing investment company. So if you look at these names, they give you some assurance. However, if you look at some of the smaller companies such as Xtracker, which is Deutsche Bank Asset Management, or Wisdom Tree, some of these smaller names, when you look at the ETFs issued by these companies, you may need to dig into the alternatives. If the BlackRocks, the Vanguard, and the State Street of the world have similar ETFs, you may want to go after the big household brand names. Number 2, the size of these ETFs. So the traditional wisdom is the larger the ETF is, the safer it is perceived to be, just because the larger it is, the more revenue this ETF generates for the company, and the company is more financially robust to run this ETF. So if a $1 billion ETF versus a $50 billion ETF, all things equal, the 50 billion one is the one you need to pay more attention to. Number 3, the trading history. So if the ETF has been trading for the last 30 years, which is the case for some of the Vanguard ETFs, versus a new ETF that has been just trading for 3 months, so that difference will tell you a lot. So again, all things equal, the 2 ETFs, one is 10 years old, the other one is 30 years old. You may want to look at a 30 years old if it's tracking the same index, underlying index that they track, and the only difference is one has been trading a lot longer than the other. The general wisdom is you need to follow the longer dated one. Number 4, fees. So you do pay underlying fees for these asset managers to manage the ETF on our behalf. So for some of the Vanguard funds, you will be paying 7 basis points, 10 basis points. The same amount goes with the iShares. For some other ETFs, especially those who are actively trading, you do need to pay a higher fee, like 70 basis points, even over 1%. So over the long term, the amount of fees you pay do eat away the returns you can generate from investing in those ETFs. So all things equal, if an ETF is lower in fees, they are more favorable for your long-term investments, because by the end of the day, you want to keep as much as you make to yourself, as opposed to paying out as fees to the asset managers. The next on the list is return. So it does tell you a lot just by looking at the long-term returns for lots of the ETFs you may follow. For example, if you look at the US ETF, in the long history of the last 30-50 years, the return has been consistently positive. You do have drawdowns every 10 years, every 15 years, but over the long period of time, markets such as US, Europe, UK, they do generate positive returns. And on the other hand, some of the emerging markets, they're more volatile, the return is less stable, and if you compare the emerging market ETF versus the US ETF, it's very clear that you can tell the US ETF has been outperforming the emerging market one consistently over different time frames, especially over a long period of time. Number 6 is volatility. So volatility is basically a measure of how stable or how volatile share price history for the ETF is. Once again, they vary across different asset classes. So equities, they tend to be more volatile than fixed income. Again, just looking at visibly how the share price has been trending over the last 30 years, 50 years, you can get a lot of information from just factually looking at the share price charts. So again, within, for example, equities as a class, if you look at US versus emerging markets are more volatile than the US. And so that's something quite important if you want to build a robust portfolio over a long period of time, and you can't really tolerate as much volatility as someone who's younger, who's at their start of their journey. So if you're, let's say, in your retirement age, you may want to prefer someone that is more stable and consistently giving you positive returns across different time frames. So that is, again, all things equal, if an ETF is less volatile and you like stability, that is something in your favor. Number 7 on the list is to look at their top holdings. So an ETF is basically a fund that invests in a collection of securities. And if you invest in a stock ETF, you are able to actually see the disclosure from the fund management company. If it's a actively managed ETF such as ARK Invest, you're able to see the top 10 holdings, top 15 holdings within this ETF. And that is the case for almost all the ETFs out there, because by definition, they trade on the stock exchange and they do disclose their daily buys and sells. And by the end of the day, you're able to tell how much of each stock that ETF is investing in. So by looking at the top 10, top 20, you are able to see how the fund is invested. And actually, if you prefer to invest directly into individual companies, looking at what the ETF is investing in can give you a lot of ideas. For example, if an ETF that tracks the S&P 500, you may not like some of the defense companies that sells arms and weapons. You can actually strip them out and invest directly in some of the larger holdings to try to replicate that S&P 500 ETF. So once again, top holdings is something that a lot of people who invest in ETFs don't look at very closely, but if you do, that is able to give you lots of ideas because you're just learning from the ETFs themselves. Now the last one, number 8, to look at before you buy any ETF is to check if they invest in any particular themes. So theme investing is actually becoming very, very popular because people like to match what they invest in to what they believe in, and the themes or the thematic investing in this case is a very good way to match the two. So you will be able to see lots of different themes, from electric vehicles to clean energy to socially responsible, water. So all of these different themes, robotics, data, AI, automation, so blockchain technology, genomics. So just to name 5 or 6 different themes that are very popular on the markets these days. A lot of the ETFs now are issued by tracking or following certain types of themes, and the mandate requires the fund management companies to select investments that match those themes that the ETF is labeling itself. So if you want to invest in directly some individual themes like socially responsible, which is a very popular ESG category these days, you can actually find a number of ETFs. So this is something that has become very popular, rather than just tracking the underlying indices such as S&P 500 or FTSE All Shares or MSCI World or emerging markets. You are now able to track different themes by investing in different ETFs. So that is something new in the most recent 1 or 2 years time. So these are the 8 different areas that you should look at before you buy any ETFs. Do we miss anything? If you think so, tell us in the comments. Looking forward to interacting with you. See you next time.